very pleased to be joined by Joachim Nagel, who is the president of the Bundesbank and, of course, ECB Governing Council member. Thank you so much for joining us here in Stresa, Italy, to discuss some of the main themes that we're dealing with here at the G7 finance ministers and central bankers meetings. I'd like to begin, if we can, on some of the data we've got this week out of the Eurozone. We really had a very, very strong wage print for the first quarter. How is that affecting your thinking about where rates should go, particularly since we're expecting inflation to tick up next week? Is it really appropriate to cut rates under those circumstances?
I think, first of all, it was not a surprise to me that wage data came out pretty strong. I think wage data is often a kind of a lagging indicator. So what we saw in the latest data is related to the high inflation rates of the past. A lot of one-off payments are included in the current wage data. So my expectation is that there is a flattening of the wage data that is occurring over the next months. So I believe that is some relief coming also from the wage data side. But nevertheless, wage data are still strong. So we have to keep our vigilance when it comes to the next rate decision.
So it sounds like it's not concerning you that much. That being said, next week we are expecting inflation to come back up in Germany, in Spain, in France, in the Eurozone, core to sort of slow its descent. Does that not concern you?
I think as a central banker, you're always being concerned. But what I see, the trend is the more important issue here. What I see is that over the last couple of months, inflation rates came down. So what I expect also for the next months, that inflation is coming down further. Core is coming down. Headline will come down, came down here already. So what I see is that the probability is increasing that in 13 days we will see the first rate cut in the Eurozone.
And beyond that, do you think that we can rule out then back-to-back cuts given the sort of uncertainty on the outlook for inflation?
I think I believe this is a very important point. There is not a kind of an autopilot that when there is maybe the first rate cut, that there is a consequence, maybe, let me say, more rates cut coming. I think this is something, I believe this is not helpful, this discussion. What did we really right over the last 2 years is that we really followed the meeting to meeting here understanding, and I believe that should still be the case. So if there's a rate cut in June, we have to wait, and I believe we have to wait till maybe September, I think July. But as I said, it is too early to speculate.
It's maybe difficult to give forward guidance, do you think, under these circumstances particularly?
I think, or I believe that forward guidance was helpful maybe in an environment where there are blue skies, sun is shining, but now we are in a world that is more difficult. Yeah. It's a very uncertain world, a lot of geopolitical risks. So the data that is incoming is the most important indicator that we have to follow.
And some of the clouds in that sky has to do with the sort of trade action that we've seen out of the United States, raising trade barriers with China. We're expecting the EU to do something similar with EVs. I'm sort of interested in how you see that playing into the inflation story. Could you see prices going up as a result of more protectionist policies?
We shouldn't forget that most of the things we discuss here in wonderful Stresa has still to do with that unprovoked war of the Russians against Ukraine, and this is still the main factor. So we shouldn't forget what's going on here. The trade issues are becoming more and more important. Fragmentation seems to be something we have to deal with, deglobalization, but we also should take into account that fragmentation is harming economic wealth, economic growth, and we should find a smart way how to deal with this.
And so another bit of fragmentation or perhaps divergence you can find between the Fed and the ECB and what we're seeing with rates, and I don't want you to comment on the Fed or see how it bears on the ECB, but I'm curious to know, because there are people on both sides of this, is the divergence between the Fed and the ECB, is that inflationary for Europe or disinflationary?
First of all, we have also to take into account that the situation in the United States is different from the Eurozone. The situation in economic terms in the United States is stronger than in the Eurozone. Inflation in the United States seems to be a little bit more sticky than in the Eurozone. What I would like to say with this, that we have to do monetary policy for the Eurozone. This is our task, this is our mandate, and we are on a good track. Inflation is coming down. But nevertheless, there are some spillovers. Take, for example, the economic models we are using. So there are some let me say, feedback loops. What happened in the United States has some impact on the data we are using. We are not more or less completely here independent from what's going on in the United States.
Do you have clarity on what that impact is, or is it hard to tell?
I guess we have a good understanding what's going on there, but all what I see, taking the Eurozone data, and this is at the first level, this is my first line of defense, and I have to look what's going on there. This is of the, let me say, highest importance to the Governing Council, and what I see there is absolutely giving me here is the confidence that I have that we can maybe, with a high probability, lower rates in our next meeting.
And I want to talk also about sort of the EU election, which is just about 2 weeks away, and some of the political stories that we've felt, certainly in Germany, certainly the rise of more extremist anti-democratic portions within Germany. You've been very vocal on this. You've joined sort of protests. What do you see as your role and your responsibility there, and what effect do you think that has? Joining these protests? I
think over the last 70 years, Europe is an achievement. We achieved a lot in terms of democracy, freedom, and it was important to me to get out, to really address all these issues, that the danger, that I see the danger, that maybe some groups that are jeopardizing all what we achieved over the last decades. And so I believe it's even for a central banker. I think this is also influencing the economy here in Europe. I would like to see a Europe with a lot of diversity, freedom of speech, and this is important to me.
And I think that potentially, though, some of the reaction, some of the reason that you see people moving in that direction is because of the fear, economic uncertainty, whether it's the energy crisis in Germany, whether it's, rising costs, even AI and these sorts of things, and sort of losing faith in the mainstream approach to this. How do you reinvigorate credibility in the sort of mainstream approach to solving those economic fears?
I'm not sure if these are really the root causes for those that are arguing against Europe. I think what I can deliver as a central banker is price stability. This is my mandate, and this is what I will deliver at the end, and this is what we will deliver in the Governing Council. But beside that, I believe it's also important that the representatives of organizations, institutions like the Bundesbank, they are really clear here what Europe stands for. Europe is an achievement. It brought a lot of, let me say, growth, wealth for all Europeans, and it would end up in a kind of a catastrophe to giving up on that.
And while you mentioned your mandate, there was this big speech that Emmanuel Macron gave a couple of weeks ago. In there, he did mention the ECB. He talked about maybe targeting growth, maybe talking about carbon transition. What is your reaction to that when you hear Emmanuel Macron saying that?
President Macron is an inspiring leader, so I appreciate everything what he is saying about Europe. Regarding the mandate of the ECB Eurosystem, I have a little bit of different understanding. I think it is complicated when we are trying to think about to maybe come to dual mandate or doing much more. And I believe it wouldn't be too much on the shoulders of the Eurosystem. So we should really stick to our mandate, achieve price stability. And I alluded to that. This is the best thing we can do for the economic situation in Europe.